We brought you here purposely to go through the IFMS work GST withholding process. You may have done yours correctly. Some might have some issues that they didn't do it properly. This is an opportunity for us to discuss. And so in the future, we know from now that these are accounts that should be withheld, or GST should be withheld or not. So for that reason, we recall for a refresher. Before I allow IRC to come, I'd like to thank you all for your time. Thank you, IRC team, for your presence. Thank you, finance team, for your presence. And thank you for the organizers, the events coordinating team who did up the stage for us. Thank you. I'll call upon IRC rep to come and take us through the fact sheet. Okay, thank you.
Good morning, everyone. I hope you're well and healthy. I mean, amid all the COVID situation that we're in. This morning, my name is Jennifer Jonathan from the IRC, and I will be taking us through the GST Section 65A, what it really is, and how it's affecting in terms of the process in IFMS. So I'd like to thank every one of you, the Department of Finance, the training team, the IFMS team as well. And not only that, not forgetting all you, the departments, in terms of your participation. The whole thing will not work without you supporting us. So before I go on to the presentation, I'd like to give a background in terms of what Section 65A is and the project that the IRC is currently undertaking in terms of the GST withholding. So what it really is the Section 65A, it's really a provision within the GST legislation or the GST Act, which is one of the tax legislations that the IRC administers. So we have the provision within the Act, it's to ensure compliance. So if a taxpayer is not compliant with the GST obligations, what would happen is the Commissioner General will issue a notice to the person who's paying. In this case, we have issued, or the Commissioner General has issued a notice to the departments as the payer. So you will withhold the 10% from the suppliers. So what has happened is that it has come to our attention in terms of from our records that suppliers to government, they are recipients of taxpayers' money, the money that you and I pay, not only you, but everyone else. For every one of us, we pay tax. So for instance, this week would have been fortnight, and you would have received your pay slip, and you would see the amount of tax that you pay. So for you and me, it's like faithfully, we don't have a choice because our employer dedicated every fortnight deducts the salary and wages tax. But just imagine our suppliers. The tax that is collected, given to government, then it's redistributed, and then they get it from service they provide to government. But it seems that most of them have not complied with the GST obligation. And that's for the whole reason why the IRC initiated the 65A process. So it's not something new, it's something within the GST Act. But really, when there is non-compliance, that's when we get to use the provision. So that's just basically what Section 65A is. I want a show of hands who attended the first workshop that we conducted with Department of Finance. Can you give me a show of hands if you've attended that session? Okay, it seems that most of us have attended. So what I'll go, for the benefit of others, I'll briefly go through the presentation that we initially presented. It's nothing new, it's the same presentation, but for the benefit of others, I'll just briefly go through. the 65A presentation, and then I'll spend time on the fact sheet. So the first slide is just a disclaimer. What we're presenting today is just what the law is. So 6 months, 12 months down the line, the law may change, and what we're presenting today may not be relevant. So this is just letting everyone know what's presented today is currently what the law is. So the presentation is just basically to understand what the Section 65A process is, the provisions within the law, really the obligations of the departments who are paying, the obligations of the IRC, and also the obligations of the taxpayer. So just basically covers what the process is. So as we know, or as I stated earlier, GST is one of the tax legislations that the IRC administers. And it was first introduced as VAT back in 1999. And then there was some disputes over in terms of distribution. So the name was changed from VAT to GST, just to sort out the distributions, especially to the provinces. And we'll cover that as we go along in the presentation. So for the rate of GST in PNG, it's 10%. GST is a final tax. For you and me as the consumer, the final consumer of the good or service, then it's a final tax. For a business person, it's not a final tax. And therefore, that's the reason why we have the last point where it says it's not a liability to business, or it's not an expense for business. I've covered that where the 65A is only used when there is non-compliance within a certain industry or within a certain group of taxpayers. So if there's no non-compliance within that certain area or certain group of taxpayers, then we use the Section 65A notice or provision. Apart from government departments, we also have Section 65A notices to the primary produce such as coffee and cocoa. So that's where we have 65A process there for cocoa and coffee. And also copra, not so much of copra, but coffee. I've covered that where the 65A was initiated for government departments as a result of non-compliance from suppliers to government. And we think, or we believe that as recipients of taxpayers' money, our expectations of them is that they should be the first to comply with the tax obligations. But from our area, we've noticed that most of them have not been complying. They've been getting the money and then running away. These are some of the advantages and disadvantages of 65A process. One thing is it improves compliance, also improves payment. The government gets its money up front, then having to wait for the taxpayer, or the taxpayer doesn't come at all to comply or pay their taxes. The disadvantages that we have as well is it increases workload, but we've kind of mitigated it, and that's the reason why we're here, where we have the system, which is the IFMS, to do the withholding, which kinds of eases the manual work that the departments were previously, so we started the project with about 11 agencies, 15 in total, but out of the 15, 11 were government agencies. And what happened was that they were doing it manually, and it kind of created additional work for the finance team within the departments. And one of the areas that feedback we got from them was if the system could, if the IFMS system could automatically do the withholding, then it eases work and reporting within the government departments. And the finance team took that on board, the IFMS team, and that's why it's now configured. So it kind of eases that burden. So I talked about the obligations. The obligations for the IRC is we manage the lodgement. We ensure that the departments lodge their G6 forms, which is the remittance form for the 65A. We ensure that in terms of the receipting, because the system is doing the withholding, the Department of Finance will be doing the payment. So for the departments, all you have to do is ensure that you withhold the 10% from your suppliers, and at the end of the month, so for instance, we started the withholding in May, so your first return will be due in June. So you have to lodge your G6 form before the 21st of this month. So that's all you do. For the payment, that will be remitted by the Department of Finance. So for the approved withholder, I've covered that, the G6 form, and you lodge it. So all you do is just the G6 form. And you give us a copy of the supplier listing. In terms of the supplier listing, that's made easy already for you because you're able to generate that report from IFMS. So it has made it really easy for the departments now, the system. So in terms of completing the G6 form, the report can be generated from IFMS. For the supplier, so if your suppliers are telling you, what will happen to me now that you've withheld the 10% from my payment? So for them, in order for them to claim the 10% that you withheld, all they need to do is lodge their G1 form. So the G1 form is like the GST return. So if they're querying in terms of the withholding, what happens to it? You tell them, if you want to claim your 10% GST, you lodge your GST return to the IRC. These are just the sub-provisions within the GST. It talks about accounting for GST. So we have the payment basis and accrual basis. So payment basis is when in terms of this slide here, it's really about your suppliers or our taxpayers when they account for GST, when they lodge their GST return. So it's not really for concern for departments, but just basic understanding how GST is accounted for and how it's reported. So for the taxpayers or our suppliers, there's two methods of accounting for GST when they lodge the GST return. So we have the payments basis. For payments basis is when it's about cash. You receive the cash and you record the sale. You do the payment and you record the sale. In terms of the invoice basis or the accrual basis, it's when the service is provided. So for a lot of us would be when they provide a service, then they record it as a sale. And when we incur the expense, not necessarily when the cash is paid, but when we incur the expense, then it's recorded as an expense. So that's basically mostly concerning people who are conducting businesses. So these are the lodgement dates of the G6 form. So take note, the lodgement date for the G6 form is before the 21st of this month. So our May return will be due before the 26th of this month. And in terms of penalties, because you will not be paying, the departments will not be paying, the payments will really be on Department of Finance to ensure that the payment come quickly to the IRC. The reason that we want the payments to come quickly is that because we need to credit the payments to the supplier's account. Because we've done the withholding, we ensure that payments have to come on time. And if they don't come on time, we have penalties that will apply. So this is the G6 form that you'll be completing. Can you show of hands if you've seen a G6 form? Have you seen a G6 form? Okay. Some of you will realize that you will not see a G6 form. The reason is that it's only the person who's authorized within your organization who signs off the G6 form will be the only one dealing with it. So not everyone within your organizations will have access to the G6 form. So the G6 form is really, if you've seen a P7 form or a P9, I think a P9 form, where you report all the payments that you've withheld from your suppliers. So it's really similar to a P9 form that you give to the IRC. So what it is you list all your taxpayers, the amount of GST that you withheld, and the total amount of the invoice. And then you complete that form and you forward to us. But that information is now in IFMS, so it makes it, you just generate the report in IFMS and you're able to complete your G6 form. And then we have the requirements where you have to, whoever your delegated financial delegate, the authorized financial delegate has to sign it off before you lodge it with the IRC. I think one important note that I want to stress with the G6 form is that it's really important you lodge it with the IRC because finance, we still get a consolidated report from the Department of Finance, but it's good, it's easier for reconciliation purposes, especially if you're going to do changes or there's queries within or from your suppliers who have queries. It's easier if you, for us to sort out those queries if you give us your individual G6 forms. Another important thing that we like to stress here is the difference between business payment tax and GST. There's a lot of confusion. The confusion is on the rate. They both have the same rate of tax, which is 10%. So there's always a lot of confusion in terms of from which total should the 10% for GST deducted and in the event where there's no COC. So I'll give you an example. So there's a difference between the two. GST is a different tax. Business income payment tax is related to your income tax. So for GST we have the 65A. For income tax we have the COC. So if a taxpayer is not compliant with the income tax obligations, then that's where the IRC does not issue the COC. So currently there's only 5 industries that are subject to COC. So only those 5 industries, if a supplier is providing services to you and they fall within those 5 industries, you have to request for them to provide a valid COC. Another thing I want to note is that it has also come to the IRC's attention that there's a lot of there have been fraudulent certificate of compliance. There's people going around creating their own certificate of compliance. So if you are receiving a certificate of compliance and you or would like to confirm whether the certificate of compliance is genuine or has been issued by the IRC, you can contact the IRC because we have realized that people have been creating fraudulent certificate of compliances. So this is just an example of how you will withhold GST where a person has a valid COC and in an event where a supplier does not have a valid COC. So we have the example here, ABC Contractors is a contractor to Department of Works who is an authorized 65A withholder. So you can see from the example there. So the first point there is where the supplier ABC has no COC. So the value of the contract is 220,000, which is inclusive of GST. So in this case here, GST is 20,000. So that person does not have COC, so the withholding is on 200,000 because business payment income tax is on business income. So the person's business income is 200,000. 220,000 is inclusive of tax. So you do the withholding on 200,000, which will be 20,000, and you pay the contractor 180,000 because they don't have a valid COC. But with the 65A now, you will do another 10%, which is another 20,000. And the taxpayer will claim, or will get only 160,000. And for the taxpayer, if they're querying why are they not, how will they get the payments that have been withheld? For them, they have to lodge it to claim the business income payment tax, they have to lodge the income tax return. And for GST, for the GST withholding, they have to lodge the GST return. So the payment is not final. As long as they lodge their tax returns, business income tax for income tax and the GST, then they claim the payments that we've withheld from their invoices. So that's the end of the brief presentation on the 65A process. I'll take questions, or I can proceed with anyone has any questions before we proceed with the 65A fact sheet? Anyone has any questions? So what I'll do this morning is just go through briefly about the fact sheet. The fact sheet is really, in a nutshell, what 65A is, and some of the things that would not have the withholding apply when you're processing payments for your suppliers. So if you go through this is just basically general information on GST and how we account for GST. There's a certain page that I want to concentrate on, and that's on page 4 of the fact sheet. There's a list of payments there that would not have GST applied on it. So one of the first points is the staff-related payments. So if you have any staff-related payments, that will be salaries, wages, commission, overtime payments, leave fares, any travel allowances, cash advances, anything to do with staff. The reason why GST withholding would not apply is that those items are subject to salary and wages tax. So therefore, if you have GST, that's double taxation. So if one tax is already applicable to those items, we cannot have GST applied on it as well. So it's really important that for these payments, you don't do any withholding in the system. And for the month of May, I think there was a lot of queries. And of course, it's the first time for us to use the system. So it was a learning process for every one of us. So going forward, any payments, staff-related payments, as mentioned in the fact sheet, please do not do any GST withholding because they have salary and wage tax already applied on it. So do not have GST withholding. Another is the withholding payments. So the classic one is the business payment tax. So if you're doing withholding for business payment tax, don't apply tax on it again when you do the payment to IRC. So whatever amount you withhold, that amount you pay directly to IRC. Payments also to educational institutions. So if you have training, staff training for your staff, and you're making payments to educational institutions such as the IBS or Unitec or UPNG, those payments wouldn't have GST because educational services are exempt under GST, under the GST Act. So if you're making those kind of payments to these educational institutions, you shouldn't do any GST withholding on those payments. Yes, Dandelion? Professional training, so under the GST Act, it has to be an approved educational institution. So all our government departments approve. Any institutions that are private, you need to confirm with us because the education department, there's a requirement. You have to be a approved training institute or under the NTC. So if you have any private institutions, you have to confirm with us. Otherwise, all the government universities, those are educational institutions under the GST Act. Because the GST Act specifically states it has to be an approved. When you say approved, it has to be approved by the Education Department or the Office of Higher Education. So those private institutions like DATEC, CPA, and the others, we need to confirm. So in order for you to, before you do the withholding, you confirm with the IRC team whether these institutions are approved by the Education Department to be exempt from GST.
We have a GST team. So if you have any queries in regards to the 65A, we have a dedicated team. And we have, if those of you who were in the last session, you would have seen Degemba do the presentation. He is the team leader for the team. So we have a dedicated team specifically to answer any queries in regards to 65A. And I have if you see the fact sheet, there's a contact at the back. So any issues that you have in regards to 65A, please contact Degemba and his team. Otherwise, if you send an email to the 65A group email, then the team here will look at the query and then respond to you. But Degemba and his team are always responding to queries. So if you have any queries, please, if you're calling the general IRC, then my apologies, they will be putting you across all the divisions. But if you call directly to Degemba, then, or email the team, then they'll respond directly to you. So please get the number. If you don't have it, you can get it from the team after the session. Okay, let's move on. New Guinea is one supplier that also will not have any withholding, especially if on the UATP accounts, the prepaid accounts. So if you have a UATP prepaid account, then you won't have do not hold any GST on the payments. The reason is that the payments already in the New Guinea account, you're not able to go ahead and then do the withholding. For the postpaid, so if you have a postpaid account, a UATP postpaid account, then you can do the withholding. But if it's a prepaid UATP, no withholding for New Guinea. And that also goes for travel agents. So if you are paying travel agents, the IATA approved travel agents, so we'll be getting a list shortly from IATA in regards to those travel agents that are approved. So if those service providers are IATA travel agents, then you don't do any withholding from them. And they have to give you a certificate, an IATA certificate or a number. If they don't give you that number, you go ahead and do the withholding on the payments. That's for travel agents. And also payments between, some of you would be paying intergovernmental or grant funding from your departments. So those payments, when you're doing the transfers, there won't be any withholding. The reason is that there was no service provided. You only do the withholding when there is a service provided. In this case, you're just transferring funds between different departments or different trust accounts. So in those cases, there will not be any withholding. So that's in regards to some of the supplies that you get that would not attract any GST withholding. Another important thing we've also noted for this month is going through the IFMS listing for the withholding. We've noticed that some of your suppliers have not provided their TINs to you. So we are working with the IFMS team. We'll be sending an email shortly to each of you. So if you get an email from us, please ensure that you complete the TINs for those, or register in your registration for those suppliers. Ensure that their TINs are placed against their names. The reason why we say to put their TINs is that if we don't get their TINs, we're not able to transfer the payments to their GST account when we receive it in IRC. So it's really important for the departments that all your suppliers should have TINs. So ensure that when you are making payments to your supplier, if they don't have a TIN in the system, ask them to provide you a certificate so you can complete that TIN in the system, so that when the payment comes, we're able to transfer it into their account. It makes it easy and also reduces frustration between the supplier with you and also with us. So if we can ensure that all new suppliers going forward should have TINs. Another thing we also noticed from the May withholding in the system that the finance team has shared with us is when you're doing withholding, some of the compulsory fields are the TIN, and the other one is the provinces. The reason why we say provinces is because GST, a certain portion of that goes to the province. So it's like revenue for the provinces. So it's really important that when you're doing the withholding, ensure that even though the ticket was bought in Port Moresby, but the service was provided in Ley, allocate the sales to Ley so that Ley gets its fair share of GST. Because we've noticed that in May, there was a certain supplier, the supply was provided in another province, but because the payment was done in Moresby, they declared it as payment for Moresby. And it's not fair in terms of the provincial government. So there was a recent issue, if you've been following IRC, about NCD and the IRC, Central Province and Gulf and the Motu Koita. So we help by doing that so that each province get their fair share. We do that in the system so that when the money comes to the IRC, it's distributed correctly and each province get their share. So it's really important that you have the TINs and don't put NA. For province, please ensure that you allocate the GST sales to a province. Because there's some, for last month, they put NA for province. The sale should take place in a province, not applicable. So ensure for provinces going forward, for the province field in IFMS going forward, I do not want to see the NA. I want the sales to be allocated to a province. I hope that's clear. Yes.
NCDC, or we commit under the provincial, the outside part of their code number, provincial code? Because this is confusing now, like what you're saying.
So for travel, there's several components to travel. You have the airfares, you have the accommodation, you would have logistics, transport hire and whatnot. So for New Guinea, if it's postpaid, you will do the withholding as the service provided. It will be from NCD going out. That's for airlines. For accommodation, if the travel was to Ley and there was a hotel in Ley, the accommodation portion should be allocated to Ley. If the hire car was provided in Ley, that GST for the hire car should be allocated to Ley.
So when we are committing, we will have to put the provincial code for the province from the outside part of it. Because if we continue putting NCDC, then it will appear as NCDC.
Correct. The money will come to NCD.
Thank you.
If it's the service if the supplier, when they give you the invoice, allocate it to Ley if it's in Ley. If it's to Kokopo, allocate it to Kokopo. So they get the fair share of GST. Sorry, I have a question here before I come there. Sole trader.
Yeah.
Yes, a sole trader. So from our experience, the sole traders will register as business names
Yeah.
in IPA.
Yeah.
So when they register with IRC, we register them as individuals.
Yeah.
So it could be Joe Blow trading as XYZ hire cars.
Yeah.
So we will issue a TIN to them. They would have a TIN, and it will be registered under the individual name, which is Joe Blow.
Yeah.
So yes, they're required to have a TIN.
Okay. In another case, there's 2 directors. We have separating for the 2 directors and a separating for the business name. How do we distinguish that?
Okay. With business names, they won't have directors, they have owners.
Yeah, owners, sorry. Yes, owners.
So with owners, they're both required for tax, they're individually registered.
Yes.
So both will be required to have a TIN.
Yeah. And a separating for the business name?
We, as business name, we only issue to the individual, not to the business name. So it's the individual as the legal person. So that's the difference. With companies, we register the company, the entity, because the entity is a legal, the company is a legal entity.
Yep.
For business name, it's the person. In accounting, where the person, if you're an individual conducting a business, the liabilities of the company rest on you as the final person, the owner of the company. For the company, when you're registered, the owners of the company are separate from the shareholders of the company. That's the concept.
Okay. Then, sorry, I have a related question to IFMS. We have a sole trader. We registered as the taxpayer TIN in the system, but the check is still requiring a TIN number before the check can be printed. We have a current situation at the Department of Personal Management.
Correct. TIN is compulsory. That was a requirement from IRC to IFMS. Because that's your identification. When the payment comes to IRC, we identify you with the TIN. Without the TIN, we can't identify you, and we cannot allocate the payment to you. So therefore, the individual person is required to finish their TIN to the government department. So if I'm a sole trader, I have a TIN, which is my individual name. I have to provide that TIN to the government department. So when the government department does the withholding, they will quote my TIN on the payment and in IFMS. So when the consolidated report comes to IRC with the payment, the IRC then remits that payment against that individual or that sole trader's TIN account or GST account. Take another question down there.
Okay, oh my God. This is just to add on to what you said earlier. When they ran the suppliers and found out that they didn't have the TINs, this is for the claims examiners or whoever updates the suppliers. The reason why we found out that there was no TIN in there is because you're using your existing suppliers and you've not updated them. So what you basically need to do is, before you go to try to pick up anything or raise any claims, just make sure if it's an existing supplier, go back into your accounts payable, local accounts manager and update them, especially with the TIN number if they don't have one, and if they have one, it should be okay. So that's one of the reasons why they were able to pick up that most of the suppliers didn't have a TIN to it.
Thank you. Yes, Caroline.
In IFMS. Sorry. This is regarding the provincial distributions. All entries will be taken up in IFMS system. I just want to understand that process when the funds are remitted back to IRC. Um, is there any report that will be generated by Department of Finance or IRC, which will give a list of those provinces? Because in IRC, there's a separate division that manage that area of distributing those funds to the provinces. So because there's excess level functions that, that division may have not access, that division might require a report of all of those breakups to the provincial distributions. So it's gonna, that's my question. We just want to understand a report format or a template that can enable us to do the distribution to the provinces. Thank you.
Thank you, Caroline. I think I mentioned that we get a report. So the payment comes with a report from the Department of Finance. It comes with a report. So the report tells you whether it's consolidated. So it tells you the provinces, the names of suppliers.
In IFMS, because we will have access, we might have not access those reports because the functions that we are allowed to work on might stop us to do so.
Okay. Thank you, Caroline. I know you're coming from where Caroline works in the finance and budget team, and they do the distribution. So she's really talking about the payments, and we do the distributions. So Caroline, it's more like administration in terms of how IRC does the administration in terms of the distribution. So it's something for the organization, for us, IRC, to discuss that. So it's more like when we collect it and when we do the distribution. So it's something for the team to discuss. Doesn't concern everyone else here. Do you have any questions? I think it's almost tea break. Just confirm if our tea is ready. Almost. Any questions? Any more questions? The team will be outside, so if you're a bit shy and don't want to ask questions, the team will be there. You can come forward to the team and ask your questions.
We've said for the first walkthrough, it's more detailed. This one is just a shortcut to highlight on those areas that we think we should bring to your attention. So I'll call upon one of my trainers to come and present to you, so you can refer to your handout while he or she they're presenting.
I believe that you all know the process in IFMS because you are the end users. Whether you're an AP local accounts office manager or an AP claims examiner or a payment officer, you all do know the process very well. But due to some changes to be in the system, to enable the system to collect a GST from the suppliers that we make business with. So just briefly, we'll take you through the process, how it is done in AP Local Accounts Office Manager. So can we have a show of hands who are the AP Local Accounts Managers? Good. There's so many of you here. Can I ask a question? What is the first thing that you do as an AP Local Accounts Manager? When you are now making business with a supplier from outside, what is the first thing that you do? Come on, AP Local Accounts Officers, what do you do? Or you just go and tell them, oh, you're my friend. I do know you. Let's go and make business. Is that what you say to them? No. The first thing that you do, you really want to know the detailed information of that particular supplier. So therefore, in IFMS system, it has already been catered for, and that is the AP AP accounts form, the main form, and that is known as the Supplier Registration form. If you are not using that form, please, we encourage that we should be using that form, because that is the first-hand information you get from that Supplier Registration form. Out of that Supplier Registration form, you are also creating the pay code. Without that Supplier Registration form, you cannot create the pay code. You know, some lopigas before you miss you see, because I know somebody is trying to make business with me, me talk, okay, you come, I'll give you a new pay code. That's what we used to, that's how we used to operate. Now, no God. There is a form that is provided by IFMS, which you and I, we must use. So when we are accepting that supplier registration forms, we go through that supplier details. And this is where these two new information comes in, or the changes come in, and that is TIN, a tax identification number. That tax identification number, or known as TIN, is given that when the supplier is registered himself or herself with IPA first, you get yourself registered with IPA, and then you come to IRC. So when you come to IRC, that's the time when they give you that TIN number. So I just wonder, well, without the TIN, we still go ahead and we make business with the suppliers. So in another word, we are encouraging those suppliers not to go through the proper procedures of following the legal process, getting yourself with IPA, and also getting yourself with IRC registered. So when you are registered with IRC, you are given a TIN number. Without the TIN number, should we operate or should we make business with our suppliers? That's the question I'm throwing back to you guys. The form was designed accordingly. We know the law, so it was designed accordingly to have that TIN number as well as get yourself or get the suppliers registered with the IPA. So where does it start? In the IFMS system, it starts with you as the AP local manager accounts. The very person, the first contact is you. So you make it your business. You make it your business. I want to make business with you, and now you're talking to a supplier now, external supplier. I want to make business with you, so you give me your registration form. And I want to see that TIN number. Suppose not got TIN number, you should tell that supplier to go and get the TIN number. And that's the first thing. So we start right from the beginning. If the TIN number is not there within those existing data, the supplier's information, you as the AP local officer, you need to update that information. You go on to, you log on to the IFMS system as the AP local manager, and then you now start to register the TIN, you record the TIN number, and as well as you activate the GST withholding. Okay, now it is the process now. The process is given there. And this is done in your chart account maintenance. Because there is an existing supplier within the data, within the system, you want to identify who that particular supplier is, you click on the retrieve, or you call the search button. And automatically, your supplier's information will populate up. So the part that we are interested in now is entering the TIN number. Suppose you don't get this TIN number, make sure you get it from the supplier. But with the new suppliers coming to you for business, everything, that form should be filled in order. So you enter, you retrieve, and then you update that information, you enter the TIN number, and then you go on to the next part, still on the AP maintenance, but you go to the payment details. And this is where you indicate or you activate the GST withholding. Regardless of whether they are personal claims, like travel allowance, and what else? Any other allowances that you are having in place, like what our presenter Jenny mentioned? Regardless of that, whether it's for goods and services or staff-related matters, you still have to indicate the GST withholding, so that when the AP claims examiner tries to go through, when checking through the particular claim, he or she will indicate whether that particular claim is eligible for GST or not. Okay, once you have done that, you now go to there. I've already mentioned that. It's not a big portion of it, it's just a small part. So you now go and you can save, or you can save and clear, and then you close it off. So that's the part. So the point is, you as the contact person in IFMS, you are the very person to make sure that you have your supplier's details, having the TIN number on, and as well as you make it your business to indicate or activate the GST withholding within IFMS. And with that, comes to the end of my presentation. Any questions?
Just to add on what our trainer has just said, I think most of you local accounts managers or those who create the suppliers already know what you guys are doing. Jennifer raised that we noticed that the TIN numbers are not populating, and that's because we know that those suppliers had already been created like years ago. So at the claims level, when the invoice is done, you don't know whether there's TIN numbers or there's no TIN numbers. You're using the existing suppliers. So I think what you guys need to do is that you guys probably, before you create an invoice in the system, probably just check those local accounts managers. Some of you guys have access to it. You guys you guys do claims examining, as well as create those suppliers or update the suppliers. So in order to fix or update the TIN numbers, before you process the claims, just sort of double check with your local accounts manager whether the TIN numbers have been updated. Thank you.
Thank you. But as I mentioned, thank you, my colleague, but as I mentioned, it should start with you right from the beginning. If it's a new supplier that you're making business with, all that information should be on before you go ahead and register that particular supplier. But maybe if you have enough time, you can always update the suppliers' details in the system, because actually that's your role as the AP Local Accounts Manager. Thank you. Any other questions? Suppose Nogat? Suppose Nogat? Okay. Let me call you the next presenter to come and do his presentation on AP Claims Examiner. Thank you.
Good morning, everyone. I'd like to take you to one of the process that's AP Claims Examiner. Okay, the introduction of GST Section 35, the withholding of the tax, in IFMS directly affects those officers or those people working at AP accounts payable division or along that process. Okay, particularly the first one is already covered by Esther. Second one, which I will be talking about, that's AP Claims Examiner, Payments Officer, Certifying Officer, and the Section 33 officer that approves. So those are the people or officers that work along the AP payable process in our procurement or government procurement. Okay, basically I will take you through AP claims process. The AP claims examiner basically deals with two different types of claims. One is with without purchase order, and the second one is with purchase order. Okay, you know what? With purchase orders and without purchase orders, huh? I will not take long on that. I will quickly bring you through the first one, which is processing AP invoice purchase without purchase orders. All right, let's proceed. If you have your manual there, I can go by the manual. You can go to page number 7 of your manual. It's good to go by your book rather than what's on the screen. Okay, if you're a claims examiner here, you know the two claims that comes to your workstation. Claims with purchase order and without purchase order. Okay, let's talk about claim that comes without purchase order. Remember, purchase order is a legal document under Public Finance Management Act, or in other words, it is referred to as integrated ILPOCA, integrated local purchase order. On page number 18, everything is the same. Our objective today as claims examiners is to know the two new added fields. That's with all GST field and province field. These are the two important fields that you must take note of it. There are new developments in the workplace of the claims examiner. With all GST and province have already been explained by the people concerned. Our job now is to know how it operates in the IFMS. Okay, those are the two areas or fields that you must take note of. These are new developments. Okay, with all GST and province, look at the notes below there. Okay, for the new added fields, we told in GST indicate yes for external suppliers of goods and services, and indicate no for staff-related payments. For example, like travel allowances and etc., as already explained by the presenters. Okay, second one is the province field. Use such icon to select province code where goods or services is supplied. So those are the two new fields that you must take into consideration. Otherwise, everything is just the same as you have been used to. Okay, select yes or no option by using the drop-down arrow over there. So know how to use. I think you are well versed with that. But take note of the new ones with the IRC's presentation. Why GST and province code is very important for you as a claims examiner. Okay, if you put the right thing, right output will come out. If you put the wrong thing, everything will be wrong along the way. But take note, the important person in the accounts payable process is the AP accounts maintenance, and that is untouchable. The two areas, basically, the GST GST section that you need to tick and the TIN. These two fields are very important, must. It's a compulsory. Go over to the next page, which is page number 9. Select the province code, use the search icon. You know how to do that, but a little bit of explanation is given there how to do that. You click on the search icon and look for the province that supplies that particular service or good. Okay, take note, select NA for GST exempted payments. Example, staff-related payments. Staff-related payments are not tax. Take note of that. Okay, that's all you can do under province. Okay, creditor number, make sure the creditor number or the supplier must be registered first in the IFMS, as explained by the previous presenters. Okay, let's look at another snapshot there on page number 9. Withhold GST number or no withhold GST number, province code must be NA. That's for tax exempted payments. Okay. For claims section minus workplace, you can play with GST. These two are but when it comes to the accounts maintenance part, do not touch. That's the most sensitive area if you look at it seriously. Okay, so you can put provinces not applicable. When you search click the search icon, NA is right at the bottom of that. Okay, so withhold GST is no. When you do that, you will see that proposed payment reports for tax exempted claims, nothing will show up. You can prove that on the report. All right, page number 10. General rule, withhold GST, yes, for external suppliers. Province code, select code representing where good or service is supplied. Okay, that's very important. Take note, because IRC will remit the tax to the appropriate provincial government. Okay, your input is very, very important. If you put the wrong provincial code, then tax will go to the wrong province. Okay, so we are the very important people in IFMS. Okay, withhold GST, no exemption except account. Province code, you can select not applicable. NA4 not applicable. Once that is done, you submit for approval. Where will you send to? From the claims examiners without purchase order, where will you send to? To the financial delegate, to the section 32, then to the certifying officer. Okay, let's go to the final claim that comes on your way. Let's have a look at it. Processing AP invoice with purchase order or integrated local purchase order. Okay, the screen that you will go through will look something like what is on page number 11. Okay, everything is still the same. We are interested in these two new added fields. Withhold GST and the province code. Very important again. Okay, for the new added fields, withhold and GST indicate yes for external supplier of goods. And the principle is still the same. Okay, just like what you have done for without purchase order. All right, let's go to the next page, which is page number 12. Once everything is done, you submit straight to the certifying officer. Why you are sending to the certifying officer? Because it has already gone through the procurement process. Now it's your time, AP time. All right, there's not a lot of things. That's all for you if you are AP claims examiner here. With that, I would like to stop here. Any question? You can ask me. If there is no, I would like the final presenter to come. It's open for question.
I'd like to add on to what Patricia from PMNEC earlier on the AP Local Accounts Manager role about province. Now you will notice in the AP Local Office Accounts Manager workplace, you will see office locations. Just keep that location to 000 because there's a report there that comes out with an asterisk beside it on office location. So if you have all on 000, then you'll generate that one report with all those suppliers, 000. Makes it simple. If you put different locations, you'll have to produce different reports for different locations. Province, we're referring to that field there, province. It's not only for suppliers, it's also for individuals. officers, looks neat and tidy. If you leave it on NA, I don't encourage you to put NA. Put a province where the officer is based. If it's in NCD, put the number in NCD. So when we generate the report to see what errors, which fields, which office locations put NA, we don't have to go through the hard work of calling you guys to straighten it out after it's certified or printed, or we don't go in on your behalf to do those corrections. Help us, because it's a lot of workload too as well.
Thank you very much for the addition. May I call upon the final presenter to come forward, please. Thank you.
Okay, we've now come to the final process for the AP payment process. And you have already gone through the AP process from the beginning. And the end product of it is once the invoice is certified, it becomes available for payment. That's when payment processing is the same as usual, with exception that GST will be withheld from external suppliers' payment, where the supplier and the invoice have the GST withholding indicator activated. Now let's go on to the AP payment officer's role. We have payment processes, which is been updated. So role on the payment processing is to select the proposed payment report and ensure that there's compliances and validities in the report. And after printing a report, we'll also ensure that the hard copy is printed for the Section 33 or the financial delegate to go through it, to have a look at it before the AP officer print the checks. So once the checks are printed, straight after printing of checks, the AP payment officer also print the payment register. Looking at the screen, there is an additional column for GST, and that confirms GST is withheld against all external suppliers. After a check is, once they pass the GST withheld, proposed payment report, the AP officer print the checks. And there are added, 3 added columns on the remittance, which are the first one, the invoice amount, GST amount column, GST withheld column, and payment amount column. The AP examiner's role in this, as part of the payment process, is also to print the reports that contain the GST payment, detailed reports every end of the month. The AP claims examiner on the home screen has the report tabs. And once that is tabbed, the report tab is clicked. You have all the accounts payable reports for each agencies. And right at the bottom, there are 3 withhold GST payments. And the first one out of 3 is selected, GST withhold payment details report for AP ledger. And this is how it looks like. It is very important that all agencies, including state authorities and SOEs, also submit the monthly returns to IRC. And all this information is going to be showing on the GC form, meeting the IRC requirements. So with that, I'd end this little section for the AP accounts officer. And if there's any questions or comments, you can, I can get my team members to attend to it. Yes, sir.
AP payments officer, make sure the report, the proposed payment report, you check that to see that GST is correctly withheld against the item it's supposed to be withheld. And NA or no, they shouldn't be displayed in the report before check is printed to avoid a lot of stress in correcting. So the reason why we're bringing up this is for you, payment officer, make sure you give the report for approval prior to being approved by Section 33. You go through the proposed payment report to confirm that GST is appropriately withheld. And when it comes to the check printing, you'll see the check, it's printed out in the A4 page. The check but where it has the remittance detail, you inform the supplier, keep the check but original copy correctly or store it safely. Because when they are doing their returns to IRC, from their business perspective, that is their evidence to show IRC that IFMS has retained GST from their transaction. So advise the suppliers accordingly. If they lose it, who gets the blame? We get the blame. Even if it is their fault in banning it or losing it at a poker place or wherever, we, the finance or the government department, get a blame. So you do your part also in advising your supplier, look after your remittance. You can deposit the check into your operating account, but the remittance, your copy will go to IRC. So advise them accordingly. And the report that she also mentioned, it is extracted from the AP Claims Examiner's Workplace. That will go with the G6 form, monthly returns. So as Jennifer was saying, come June 26 or before the month of June ends, May returns must go in. You as a legal entity, you are to fill in the G6 form. That is your report to go with to IRC. Do that. Finance department will do the overall one. But don't wait for finance department to do it first and you do yours. You maintain your monthly returns by using that report. You may extract any other report from the IFMS, but the one that will go with the G6 form is the one that we just presented. The process how to get a report is in that handout and also in the first presentation that we did. With the AP Claims Examiner, there might be few changes coming up after this. So if you see any change, don't blindly say it's defaulted, so let me just process it the way it's supposed to be. You have to think, get out of your desk and make a call. IFMS, I'm seeing this defaulted, what should I do? So that way, we help you, you help us, business is flowing. You live stress-free at work, or you go home stressless. So please, if you see any change in your screen, don't just do it for the sake of doing it. Ask, I'm seeing this change, why? What should I do? Okay, yeah. So the reason why we call in this refresher is to highlight on this. Sometimes our own attitude in not checking the supplier maintenance officer. Check the supplier, is the supplier registered or not? Just a matter of communicating within ourselves so we all go stress-free. I hope we tried our best to get this across to you. We are looking at some changes after this. Maybe we'll give you a list of, as you log on for your AP claims examiner, as you're going in to process the claim, there'll be a list of exempted popping up to show you, or there might be another window for you to confirm whether the supplier was registered or not. These are points we are picking up from you doing transactions and the difficulties that you experience at your end. You let us know so we can try our best to make the system user-friendly for you. Okay, thank you. I'll hand over the mic to, I think our session is almost ending now. We can put it as an open discussion, question and answer for the next 5-10 minutes, and we'll go. Thank you.
My question is on the AP trust account. If you can kindly explain on that area.
Thank you. Given the mandatory to answer this, I'll answer it on behalf of the department. We haven't touched the trust account yet, so we are moving. Eventually, we'll come to the trust account. So if you are raising any claims for trust account, don't do any GSTs. It shouldn't be showing. The changes are only for the, I should say, recurrent or any other normal day-to-day business operations, but those who have configured to trust and they log in and they want to log in as a trust claims examiner, they don't see the change. So when we move to trust, then we might call you trust officers to walk you through again. And state authorities and provinces, we have a long way to go in this chain. So you are the first participants that we are rolling out to the national departments only. I hope I answered your question.
My question is regarding part payments. If we have, like, our funding is not enough and in that particular item, and we are trying to do first part payment, should we withhold the GST?
Thank you for your question. What do you think, the floor? Should we withhold GST? Yes. Okay. So the answer is yes. Eventually, the GST will add up to the full payment.
Sorry, in our case, we commit, but our checks are printed by PMNNC. So I, as an examiner, I check through the GST withholding on AP local account. But it did not show on my screen. So is it PMNNC going to give us the report or finance? Because it's not showing on our side. Thank you.
Thank you for that question. Others, what do you think? PMNNC is the department they get the check printed out from. So report will come from? Class? PMNNC. They are your accounting agency, so you get the report from them. If they don't help you, Alfred is here. You can communicate with IFMS and see if you want it to be published on your workplace. If there is a way they can do it, they'll assist you. Come over and share your worries with us.
Shigu.
Don't make this...
Start from here.
Okay, any more questions? I saw a hand at the back first.
Thank you. My question is, how can we deal with overdue liabilities in huge amount? Sorry, how can we deal with overdue liabilities in huge amounts to most suppliers which are approved by the state?
Thank you. I'll get Jennifer from IRC to answer that question.
Thank you for the question. So, when we did the configuration for the withholding in IFMS, it was effective 1st of May. So any payments that are going to be paid through the IFMS system from 1st of May would have GST withheld on those payments. So all payments starting from 1st of May would have GST withheld. Hope I answered your question.
Thank you, Jennifer. There are some government interagency transfers that are exempted, like Finance Department. We remit the provinces their share of the budget. We don't withhold GST. Provincial government, their budget coming out from Treasury. Finance, we pay to provincial government operating account. We don't withhold GST. Department of Rural Development Implementation, they give out the DSIP, PSIP money to the provinces, they don't withhold GST. So those kind of intergovernment transfers, no GST. I'm going to lose weight.
I just want you to confirm if end of this year, before 21st of June, should I submit G6 form with the report and a check, or to IRC, or the check will be done by Department of Finance and I only submit G6 form and the report?
Thank you, that's a valid question. Finance Department will do the transfer. That's our bit, how we communicate with BPNG and pay to IRC, we'll do it from our end. So for you, it's only the report, you fill the G65 form, attach it with the report and go. Okay. Business suppliers, those who are supplying service, you pay them. That's their bit to do their remittance or their returns from their end. All you do is just advise them, this copy you have to provide this copy to IRC, so look after your check remittance. I answered your question. If not, I think Lance is ready. Okay, Alfred from the support is going to say something.
Sorry, I'll steal 2 minutes or 3 minutes of your time. The process, you know the supplier registration form, huh? When we deal with suppliers, we don't do business illegally with companies, huh? We must make sure documents must be in order before we do business with suppliers. That's where the supplier registration comes in. So if we have a company that's illegally registered or they send us an invoice, why register them and pay them if we're paying an illegal company that's not supposed to be in existence? One. That's the most important. Also, AP examiner, when you commit a claim, an AP invoice, this invoice number section, supplier's invoice, type it in. It comes out on the report when we pay tax. When we put withholding tax on them, we have that invoice reference for the company to present, show the evidence. That's the invoice in their system they gave us. Province field. Don't forget the province field. When you add tax, or even, I said earlier, put the province. And many a times, when we have so many claims in the workflow, you just highlight and submit to the next user. Open every commitment, every invoice, AP examiner, open it, look at it. There are how many users in the process? Somebody will identify an error somewhere. Make an attempt. Open that commitment. Look at it. Before it comes to that stage where we print a check and we find out something's wrong. There are plenty of people in the process to check. Make an attempt. Open each document file. So when we go to the end process and the payment comes out, it goes. Because there's no error. Everybody played their part. Got it? Make sure. Perform your roles well. You're dealing with real stuff, money, business. So please don't be ignorant. In doing that, you help us also. When we generate the report to see the errors in the system, it reduces our workload. We already have enough on our plate with other IFMS-related issues. So you help us in that way so we can concentrate on other issues in IFMS. Certifying officer. While the document is still a suspended document, open it. You're the last person before the suspended document changes to being a posted document. Open. Check each one thoroughly. You may find something. You will find something. Definitely. There might be an error somewhere. Then you tell the AP examiner to do the correction, or you reject back to AP to do the correction. So when you generate the proposed payment report, you can change the destination to print report to a window. It will open up and you have a look at the column. If there's a supply, you put NA on, and we should have withholding tax on it, tell the AP examiner to correct it before you post it, certify it. I know you're all experts there now, but sometimes we are bosses put pressure on you to push it through. But please, be patient. Don't be under pressure too much. Open the document, have a look at it before you perform your role. It's hard work. After you end the process and then you come back to correct it again, it's another load of work. So please, take this advice. Do your work with pride. Do it well. So we'll help each other. Thank you very much.
Thank you, Alfred. There's a question here. While I'm walking, many of you might have Alfred's lovely voice over the phone. That's the physical human being now.
Thank you so much. I'm just trying to make a point regarding the direct deposit from Department of Finance to IRC accounts. There are a lot of tax payments that's going to be transacted into that account that will be nominated. And with the Section 65A, we have to be very descriptive on the description that will be disbursed into that account, because the risk is when we don't identify that Section 65A payment, we will identify that as an unidentified transaction. And though that G6 remittance is received by IRC, it will accrue penalty charges. So to Department of Finance, we would require a very clear description of the Section 65A. Thank you.
Thank you for your input in there. It also goes to us users to when we are raising our invoice or claims, even the AROs when they're raising the claims, advise them description supplier for what payment. Those descriptions must be entered because that will go onto the check, which will go onto the report. From Finance Department point of view, we have created an account in the system to withhold that all the withhold amount will come and sit in the IFMS system. So accountants, you know, there's a debit and credit. So you doing the payment expense out of the finance basket, then we hold the amount that we hold is called liability, which we will remit to IRC just the same, around the same period as you do yours. So yes, point taken, we'll try as much as possible to ensure that our descriptions in our commitments are registered. I'm going to go down to my experts to give a response to this. Oh, question?
Okay, so this goes to your question. I think you're saying that the IRC account you're collecting, you guys do a payment, right? But the idea of this is the system automatically collects the GST component. So you don't have to do anything. You don't have to write a description or anything. The system already collects that 10%. So you don't need to do anything about that. Is it clear to everyone? So you're not really doing any payments to IRC for that 10%.
Before Jenny answers, it's Finance Department who's doing your collected amount payment. Finance will do the transfer on your behalf. So it is on our end to describe that this is from the GST collected. So I'll give it to Jennifer.
I'll clarify that. What happens is that we get one payment, so it's not various payments from each individual entity. So all the payments are consolidated. So it's just one payment that the Department of Finance pays to the IRC. The IRC then used that payment, and from the supplier report, so the supplier report is the individual's list of each withholding that's been made. So what the IRC will do then is that transfer the payments now in its system to the individual GST accounts. So the payment doesn't come individually, no. It is consolidated. One payment into the IRC account. What the IRC does then is then transfers each individual payment according to what was withheld per the report into the GST accounts for each supplier. So each supplier, there'll be a lot of, if they're providing services to several departments, the GST amount will be consolidated and then transferred. So that's how it works. It's consolidated, one payment only into IRC, and then IRC then distributes. So for the departments, you don't worry about the payment. All you're required to do, like the emphasis now, ensure that you do your part by telling the system to withhold. And then IRC Finance then transfers the money, which is in one consolidated payment. Therefore, that's why we're emphasizing on the G6 form, because the G6 form is each department's list of suppliers that you've done the withholding. And it's easier to solve in the individual than the consolidated, because we still get a consolidated. Another thing I want to point out as well is that, remember, with the system now, we are watching. So if you're not doing any withholding from your suppliers, you will be getting a call either from the IRC. From the IRC, you're getting a letter. Remember, the notice that we issue, the 65 notice, it's a legal document and it ties your secretary of the department, and there are penalties for that. So if you're not doing the withholding, your secretaries or your heads of departments will be penalized. So if you're not doing the right thing, the IFMS team will be calling you or sharing the report with us, and we'll be issuing letters to your department. And if your department head is not happy, you will not be happy, because you'll be getting an email from them or a telephone call from them. So just take that on note.
Thank you, Jennifer. As Alfred said, documents workflow come through your inbox before it goes to the next person. Don't neglect your duty by just passing it through. Open the document, read it, justify it, send it for approval or reject it for amendment. Do your bit. Some more question? Okay, there's a hand from the back.
I just wanted to sort of point out some of the issues that Alfred, Freddie, and I always face with this GST implementation. One of the main one is that, because it is, we just started implementing this, of course we're gonna get some of our rules wrong. You'll notice that if you haven't taxed your external suppliers, you've given your checks out, you'll be receiving a call from us, and what we're going to be telling you is that the next time that your supplier is going to put the invoice through, we've already given a negative to capture that negative balance the next time a new check is printed. So if your supplier is complaining, that's what you need to tell them, that we didn't tax you the first. So we are getting that money back forcefully.
On a daily basis, IFMS team is monitoring your transactions. A supplier receives a check without the GST being withheld, that's what's going to happen. Next time around, IFMS will lock it and take out the first GST plus current one, double, trouble.
Okay, sorry, me again. You may have noticed another function added onto your AP examiner role, you AP examiners, the ledger transaction maintenance. That function, if you haven't performed any corrections after a document is certified, already posted, but you notice in the proposed payment report that they were supposed to be taxed or not taxed. Maybe you accidentally taxed an individual, an officer, travel allowance. Then we have that function added on already, ledger transaction maintenance. That's where you do the correction. You can tax, put the withholding tax, or remove the withholding tax and save. That's all you need to do, the AP claims examiner. And then you produce the proposed payment report again, and then you'll see if it was taxed or not taxed. You see on the report before you print the check. So that's another function added on. Thank you.
Some more question?
Thank you. Maybe I might be the last person to ask question. It's directed to the IRC officers. Please clarify us on the industries, especially we should expect COC from them. And that's one. Second, please explain further which industries are exempt from GST. Then if possible, at least be given to us on the email that we provided that may help us in future. Thank you.
Thank you. I'll give the mic to IRC.
Thank you for the question. So the 5 industries, that's related to COC, not with GST. So that's the industries that are exempt from certificate of compliance. So that's the building industry, the road construction, the joinery, what else? Security services, and road construction and maintenance. So that's joinery, building and construction, vehicle repairs and maintenance, security services, and the road transportation, which is the hire cars. So those are the 5 industries that are exempt from COC, subject to COC. So if any of your service providers are within these 5 industries, then you have to request them to provide a valid COC. Anyone outside of the 5 industries don't need to have a COC. But what you can request for them is that, can they provide a letter of exemption from the IRC? The IRC usually issues a letter of exemption for those industries outside from the 5. So that you can request from the IRC. In regards to GST exemptions, I covered the kind of activities or supplies that are not subject to GST. So I mentioned staff-related supplies or payments, such as your allowances, your leave travel, your overtime payments. That's covered in the fact sheet. So page 4, anything within the page, items listed within page 4, those are the items that are not subject to GST withholding. Anything outside of those listed have GST on it. So anything not GST withholding are within that list. Anything else apart from that would have GST applied to it. If you have any queries in terms of a supplier telling you that they shouldn't have GST withheld from their payments, confirm with the IRC team. And there's a contact there. Contact Dagemba, who's the team leader. His contact details are there, and confirm whether what the taxpayer or what the supplier is telling you is correct or not. But otherwise, everyone else should have GST withheld, except for the list that is provided in page 4 of the fact sheet.
One question to IFMS in regards to AP credit note. When doing the AP credit note, it shows the same way of commitment. So when you're doing the AP credit, can we do the same formula to doing the AP credit note? Just a question, yes or no?
So thank you. So your answer for that, the AP credit note, is the way you raise, because credit note applies to an invoice. So the way you raise your invoice is how those 2 field, province and the GST component, when you flag yes or no at that point, that's exactly how you raise the credit note. Yep. Just before last one, well, from me is that one of the main ones that I get is most of us public servants, we go travel agents for our rec leaves. So this is one of the main questions, is that how do we know whether we say yes or no, particularly because of our rule says IATA agents, we don't text them, and if not IATA agents, we text them. Most of the questions that you guys call me and to ask is, how do we know? For us is because we don't have a list. The main thing is your invoice. You look at your invoice from your travel agent. If that IATA logo is there, then you can consider them as an IATA agent. So just because that's one of the main ones I receive. Thank you.
just sharing an experience here. During this month of May, when we are implementing this GST withholding tax, it kind of create some sort of bad atmosphere or bad feelings between our suppliers, especially we are pinning them down to pay the GST. So I'm suggesting if maybe IRC or finance go on media, public awareness, telling them that it is good for both the business, small SME and government. So we are helping each other by circulating the money and educating them, especially on the G1 form. So they have the knowledge to go to IRC to get the reimbursement or something. Just a suggestion.
Thank you. I think we've been doing a lot of awareness. Maybe those are ignorant business owners who don't want to attend this awareness to be informed. I'll give it to IRC to answer that.
Thank you. If you've been following us in terms of our social media pages, because we've been really active in our social media pages and in terms of the work that the IRC has been doing. So we started this project back in last year, in August last year. But prior to initially starting it in August, initially issuing the letters, we actually started doing public awareness in April. So our Commissioner General issued a public statement in May, or in April of last year, in May. So there was a lot of awareness going on from the IRC before the initial issuance of the letter and the commencement of the 65A withholding. So there's a lot of information. Not only we targeted the information to our taxpayers, so mainly telling them about bringing the tax compliance up to date and ensuring that the payments were up to date, the lodgements, and all that, before we went ahead and issued the notices. So if they're saying we have not done that, that means that it's telling us something else, telling us that those suppliers are not compliant. Because if they're compliant with the tax obligations, it's not an issue. What they're doing is they'll still lodge their return and then claim back the GST from the IRC. The reason why they're complaining is that they haven't been lodging their tax returns. That's the only issue or reason why they're complaining. So it's really about them complying with the tax obligations. And like I stated earlier, think about it. You and me get to pay salary and wages tax every fortnight. You don't have a choice. The Department of Finance or your employer, whichever departments we come from, deducts the salary and wages faithfully. And imagine other businesses who are making money, and these people are suppliers to government. Our money that they collect as taxpayers is then given to them, but they don't comply. So is that fair when you talk about fairness? No. So therefore, we're doing all these activities, and everyone here we're helping each other, ensuring that these people pay the fair share of tax.
Thank you, Jennifer. If we are promoting Take Back PNG, how are we going to go into SME if we don't comply to our country's policy? In a way, it's educating us, it's educating our SMEs, educating our business operations. So, you as users, educate them too. Don't make them come and show their frustration on you and pound on you and say, why are you taking this out? Educate them. You want to be an SME, you want to take back PNG, you want to be dominant in this market, be tax compliant. In that way, it helps you to keep your books, keep your record. So in the long run, you become a better business person. Any more questions? Think hard.
Any more questions going once?
Sorry, this is not a question, but this is what has happened. There is a company, Ella Beach Hotel. They made a mention on this IRC tax, and because when we printed a check out, the IRC was taken off from there, and were given the net, and they still insisted for them to be paid full. So this goes around, the telephone calls goes around, and then it comes to my budget manager, and she says, I refer you to the right officer who can assist. So it comes to me. So when it came to me, I asked that I responded nicely to her, and then she was explaining on her situation. I only had until at the end of the conversation, I asked her, do you pay tax to IRC? This took her for some while, and she put the phone down. And then I thought, maybe this is a good challenge for these people now. They're taking into consideration of getting full amount and not paying their tax. So now we are pinning them down. Thank you, IRC, for your work. Job well done.
You see, this is how we need to take back PNG. Thank you. Maybe, who knows, a lot of GST going in, our salary tax might go down.
Sorry, on the commitment perspective, this is to do with various invoices. How do we address this? This is the AP examiner, because there's many a times when we come to committing invoices, sometimes there's several invoices on on claims. So how do we address that?
Sorry, I'll ask you again. Is it the same supplier with several invoices? From my understanding, I think its invoice needs to be withheld, GST, if it's a GST taxable service. But I'll give it to the expert.
Yeah, no, I'm not expert, I'm just trying. Bev, you have several invoices, huh? You're talking about entering those invoices on the invoice field, huh? Then it comes down to the AP examiner now. You can just put one invoice on top there, because there's a limited number of characters allowed in that field. But in the narration, that's where you enter those invoices. Narration, AP examiner. But we've been rolling out provincial government, and we've been encouraging agencies to upload claims. Most of us don't do that here, national departments. So, if you don't know how to upload, we can assist you to upload the claim. So, when we go into the history of the supplier, transaction listing, you can see that upload there.
Because as a CEO, many times I see that they just, the commitment officers just put pro forma. That's where I'm coming from. They don't state the invoice numbers. So it is paramount, like what you said.
We don't do business and just type in pro forma in the invoice field. Why do business with a company that doesn't have invoice, maybe a pro forma reference numbers? Why do business with a company that only has a pro forma with no numbers? So how do we trace it back to the source? There, think, we do business. We are there to
Just to go back further, in the AROs, they have certain economic items where it is restricted to purchase orders. So even the suppliers give a pro forma, and if it's a general good or service that is supposed to be processed as a ILPOC or purchase order, you give it to the ARO, regardless of it's a pro forma or invoice. It has to go through the ARO to raise a purchase order that will come through. But there are a few that doesn't require purchase order, utilities, or to educational institutions or training institutions. Those are areas that you can straight away raise the invoice in as a claims examiner. Then they put in the invoice number. So encourage your AROs or your business partners to always do away with pro forma, come up with good invoice. That's how we take back PNG, keep our records, keep track of their business documents. So we help one another. Any more questions?
Good afternoon, everyone. This is like I'm one of the AP examiners as well. Now, when sometimes I commit, but there's no invoices. I commit through the code. Okay. Because when I ask these officers who does not provide invoices, they advise that the supplier the supplier only provide code, and when the check is run, invoices are given later. Is it true? Does it make sense to you guys, or should that be clarified?
I'll ask you again, you are the claims examiner. The quotations should go through the AROs, but there are some, she's saying that there are some that doesn't have an invoice. They give quotation and they ask her to raise it in as non-PO invoice. So she's saying someone to help her when she asks the supplier for the codes, for the invoice. They're saying they can only give quotations and invoice will come later at payments time. So anybody with response to our sister here?
Sorry, I just wanted to add on what statement the AP examiner is asking, because some of our goods that we normally, maybe stationaries and other goods, when we ask for quotation and invoice, because normally for ARO we do purchase order and then it goes to those, it goes through the process. But for some companies, like some of our service providers, they don't issue invoice to us because they said they have their own regulation, like their invoice is like a payment already. So they don't accept our purchase orders. Even if we create purchase order and we give it to them, through the purchase order, we give it to them, it's not. To them, they won't issue the invoice. So what do we do with this type of suppliers? Because, we have our procurement process and they also have theirs. So to us, we are making business with them, but we have to come up with a solution to that. That's why our question is based on, are we going to entertain those suppliers or we look for other suppliers? Thank you.
Thank you. Maybe one, you have the option, you can look for another supplier. Or two, due to a lot of relations in the past where we get the service, we don't pay. It takes them time to come and follow up on their claims, probably. So I'm talking from that other end, maybe that's why they don't want to give out invoice. So if what you can do, print a check and go give it to them and get a good. There's a hand here, maybe someone can clarify on this.
Well, Shigu's pretty much said it. The fact that we were, as a government agency, this is from rolling out since 2011, that they never trusted our ILPOC, right? So this is basically why they don't give us the invoice anymore, and it's true. When they give you an invoice, it basically means that payment is done, right? So from rolling out back then, you guys manually still collected the quotes and kept it. So I reckon this is more administrative in your agencies. How do you keep records and have some uniformity on how you keep records? The good thing, you have a tool now, which is IFMS, to keep that record. So probably from your FASs, your directors, or you people, put out some option on how best you can keep that. But you still have to use the codes. You just have to have a best way of keeping record of them. And that's that. Number two, I think this is outside of our GST workshop. We came here to know about GST, and I think we've answered that question. It's probably me being hungry. Thank you.
Thank you. Hopefully I'm the last. So in regards to the invoices, this is in regards to the GST legislation and the claiming of input tax for the taxpayer. So according to the GST Act, for a taxpayer to claim its GST that it's paid, it has to furnish a tax invoice. Therefore, we encourage the departments to tell your suppliers to give you a tax invoice, because it's also tied to the law or to the GST obligation. Under Section 31 of the GST Act, it states that a taxpayer who's registered has to furnish a tax invoice in order for them to claim the GST that they've paid. So I encourage everyone to advise your taxpayers to furnish you a tax invoice so that they also comply with the GST obligations. With that, I think our lunch is ready. And on behalf of the, Alfred has something to say, but on behalf of the IRC team and the Department of Finance, I'd like to thank every one of you. We started in May. We got the results in terms of the withholding from the IFMS. It's just the beginning, but we've done well in terms of our collections in IFMS. And I'd like to encourage each and every one of you, the refresher training hopefully should clear some of the doubts that you have in terms of whether you withhold or not. And I hope we continue to do the good work that we've already started. And as we stated, and as Shugu just briefly mentioned, one of the reasons why we carried out this project is we understand the salary and wages tax is really high. And if you've been following our CG, he's been doing, since he joined 2 years back, he's been doing a lot of tax reforms. And one of it is to ensure that we improve our GST collections so that we can talk to government to reduce our salary and wages tax. And that's the whole reason why we're doing all the reforms. We're doing a lot of reforms in GST. For your information, a lot of reforms currently in the IRC being done for GST. The whole reason is to improve our collections there so that the burden in terms of salary and wages tax, we can hopefully talk to government to decrease it in terms of the amounts of pay. So every one of us here have an interest in this. With that, thank you. Now, give the mic over to Alfred.
Okay, last one before we go for lunch. Hope you'll hear my voice for the last time now. For suppliers, when we produce checks, and they have that column for GST. We give the check out to the supplier. But for them to claim their tax rebates, sometime it might happen. They might lose that remittance, and they'll come back to us to give them a copy or something. So can we start making photocopies of checks after they're printed? So when the supplier comes back to give them a copy, for them to lodge with IRC, at least we have a copy, scanned or photocopied. And that's all. Thank you.
Thank you very much. We'll close off. Before you leave this yellow form here, you can put it on the seat where you are sitting, because I'll collect it for my record. Make sure it's filled. Okay, we can all rise. And I release you in the name of the Father, and of the Son, and of the Holy Spirit. Go have lunch and go in peace.